One session to go. We're very fortunate as we close this FinTech Ideas Festival to welcome two brilliant leaders who are going to have a capstone session. These leaders are, of course, they began our conference. We're looking forward to having them come back and see what they've learned and cast an eye towards the future. Of course, I'm talking about Brian Moynihan, the CEO of Bank of America, who is the 2017 FSR chairman. Also joining him is Ajay Banga, the CEO of Mastercard, who was the 2016 FSR chairman. And importantly, coming to the stage to moderate this conversation is someone most of us have in our offices every day as we watch Squawk Alley on CNBC. Of course, I'm talking about Kayla Tausche. Please welcome to the stage.
Where are you sitting? Connor?
Yeah.
Okay.
Thank you again, Eric, and it's such an honor to have the closing panel with the outgoing chair of the Financial Services Roundtable, Ajay Banga, who of course all of you know, and Brian Moynihan, the incoming chair, who between the two of them have 250,000 employees, 350...
Mostly him.
Wow, you're really ceding your responsibilities, aren't you? $350 billion in market cap and more than $3 trillion in assets. So when I think about the purpose of this panel, which is applying innovation meaningfully, if you guys apply innovation wrong, there's a lot at stake. And there's a lot that you have to think about every single day. And there are more stakeholders than just your shareholders. So, Brian, I want to start with you because one of the themes that we've heard from executives when they think about innovation is what does the customer want? And how is the customer driving what you do? And how does the customer end up with the right product in their hands?
Well, you sort of answered the question by the question, which is you focus on customer needs, and then you figure out how to build a product to serve them, and then you figure out the economics last, because if you start with the economics, you'll never get past the first point. And so you just go around the virtuous circle of testing it with empowered employees and see if it works. So we do a lot of research on the customer. They want everything. They want it cheaper, faster, better, but that's their prerogative. That's why they're our customers. And then you have to have people that's their sole job is watching that. Then you have to govern that as to whether you can do what the customer wants with the scale and competency that either one of us have. But you answer the question, you start with the customer.
Ajay, tech companies pride themselves on being able to predict what the customer wants. Will you get there? Will the financial services industry get to that point?
Well, I think the financial services industry has been predicting what customers want for many years to come in the past. You think of the products they provide, basic, simple stuff that everybody takes for granted. The fact that I talk about the credit card to people who join our company and say, think about a transaction where a guy who's born in Colombia, banks for the bank there, goes to Moscow to buy a carpet, gives a piece of plastic to somebody selling a $20,000 carpet. In the old days, they slugged it, gave you back the plastic, took a signature, and gave you a $20,000 carpet and kissed you on all cheeks on the way out. That's pretty cool. That's meeting customer needs in a way that's completely seamless, completely frictionless, and now we take it for granted because the complexity of the system is hidden from the simplicity of the transaction to the consumer. I think banks have been doing that for deposits, for credit cards, for debit cards, for mortgages and the like, which are very complicated in their own way. The question is, how will it be in the next coming 5 to 10 years, given what technology has done and what computing and mobility is doing and the cloud is doing and what data is doing? Can we be as good for the next 10 years as we have been in the past 25 in meeting those needs? So that's the real
just to follow that, the easiest place to predict the customer is in the mobile digital space because they come in clean and you know who it is when they're doing it. The hardest thing is to think about, in our case, 4,600 branches or the other people. They can walk in and want anything in a given moment. That's actually the hard part of the business system. So we have about 20% of our sales in digital and mobile. That's the easiest part to actually understand and predict and do it because the customer organizes themselves. The real issue is the 80% that go on in the stores. Somebody walks in and you don't know whether they're going to need a power of attorney because their mother's sick, or you don't know whether they're going to need a mortgage, you don't know what they're going to do. They don't come barcoded saying this is my need, and then often you have to discover it. So the question where this technology takes us, how do you integrate those two capabilities so that when a person does come in, that organization can take place physically as it does online? They
don't have a barcode yet, maybe. I mean, is it possible to think beyond mobile, to think about what happens after that?
Well, they do now. They have an NFC that we actually can tell, and you could. We don't the technology there to actually tell you they're there. The question is why they're there is still a little bit unpredictable.
What about innovation within a company? As big as each of your companies, we just heard Kathy talking about the fact that large organizations do have entrepreneurial spirit within an organization, but how do you decide whether something needs to be created internally or whether it's something you source from the outside? Ajay?
So the way we've been trying to do this for the past 7 or 8 years is do some stuff inside and some stuff from outside. What I'm trying to do is to create enough impetus and knowledge from the outside, almost like a thin layer of osmosis that comes through your skin that allows you to know what's going on. So we've created venture capital funds. We're investing from everything from incubators and accelerators to a number of people in this room actually are limited partners. We're in their funds. And we invest through them, and we're trying to learn from them, from the kind of technologies they see, so our eyes are more open and more aware. But at the same time, there's a lot you can do internally by creating groups of people who I say are protected from the lunatics who run the asylum, which is guys like me. So you got to keep them away from me and from people like us whose pressures and issues of managing the company will get in their way, will keep them from being the success they can be. And we've done that by creating systems in the company that empower these folks to run independently of even my CFO and me. They don't have to produce spreadsheets to explain the rationale for investing, because all of us who've been, when we were junior in our earlier jobs, creating a 21.2% ROI on the 17th page just requires you to change one assumption on page 6, column 7, and it'll go from 2.12% to 21.2%. I don't want to spend my time trying to figure out who's gaming us. I want to spend my time trying to figure out how to invest in 10 things and find the one thing that'll be successful. And somebody said earlier, I think Dean said, I don't know which one of these will be successful. I don't either. It's like in marketing, they say, I know half the dollars I spend are wasted. I just don't know which half. And so the trick is to have the wherewithal to put money into taking the risk on the things that you're going to lose on, so you can find the nuggets that are the real winners. And the only way you can do that is a mix of internal and external for larger companies. You can't do it by outsourcing it, and neither can you do it by turning inward and thinking you can do it alone. It's not going to happen.
Brian, how does it work at Bank of America?
Well, when Dan was talking earlier, I was the person who was put out to be the e-catalyst back in the 99, 2000, and you quickly recognized that was not the way to do it. I believe that it's talent management that actually makes this happen by managers, not by the people who can do it, which is you can't manage in financial services in 2017 unless you understand all the stuff we're talking about, unless you're curious to find out more about it, unless you can handle the types of people that Dean and Dan talked about and Kathy talked about and others who don't quite fit the system. But it's a management responsibility. And if you don't manage your managers to say, this is one of your talent questions. Is a person capable of managing financial services in 2017? That's one. The second way is I agree. We have internal, external, semi-internal, semi-external, whatever possibility. So I had breakfast with 7 clients today. 3 or 4 of them contract with our company in various fashions. That would be in the FinTech or different types of spaces. People would name them, but they're out producing products that we use and stuff. And so you have to be able to find that. But that's a manager's accountability, not the CEO's accountability. But the CEO's accountability is to drive an HR process, a talent management process that says you cannot survive in a company like Bank of America or Mastercard or any of us unless you can manage that thing. What we can't do is create it outside the system. Then it gets killed, like Dan said.
But if one of your direct reports comes to you and says, there's a partnership on the table with a great company that can make lending decisions for us using data, is there part of you who says, that's great, we should run headfirst into it, embrace it, or is there part of you who says, we could get into trouble if we have someone else that's not a human making those decisions for us?
Well, in the mid-2000s, we had the best data scientists working for a company called MBNA, and you can go read the books, and it's $60 billion of credit card charge-offs later. You got to be careful what models you believe in, going to Ajay's point. So all things in moderation. So yes, you have to have speed and automation and understanding and better insights and better data. But also there has to, where I think we play as CEOs or senior executives, is how to balance that with what could go wrong. And in the end of the day, with $250 billion of credit card exposure, driven by models which were among the best in the industry, predictive and all the stuff, it didn't work. And so that, I think, is where we come in, not to curtail the creativity and innovation, but to put it in a place that we aren't betting the farm one way or the other.
Ajay, what models do you believe? What data do you believe?
I tend to be very skeptical of people who present data as the only reason for me to do something. And my approach to business has been, if you can bring your mind to work and explain to me why what you're offering me as an idea is going to be a winning idea for the end consumer, I will support it and I don't need your spreadsheet. But first explain to me why this is a good idea, what's the value in it. I said somewhere yesterday in this session that cool will not cut it is actually rule number one. Just because it looks cool, I don't want to do it. I want to know what you're really solving for. I want to know why you're going to make it friction-free. I want to know how you'll be different from the other guys. And then I'll start talking the numbers and the data behind it as compared to starting with the data to try and convince me that I should go into something. Brian was very helpful to me a little while back when I was trying to acquire a company in another country, and I had to call him for his help in getting approval from a group of people who could have stopped us from doing the acquisition. And the conversation was about why it was good for the group of people. It wasn't about the numbers. It wasn't about the data. It was about the logic of what product I could bring that would meet the needs of the group of people. That's kind of the culture that I think works for innovation. You got to get to what are you really solving for as compared to the numbers. You will come to the numbers. No business runs without the numbers. But you got to get to the core of what you're solving for.
You guys run companies in a heavily regulated industry. How much does that hamper your ability to innovate? And how many conversations do you have with officials in Washington about them embracing the winds of change?
I'd say, so let's use a specific example because there's work going on about it, which is what Dan was describing about bringing a billion plus people into the mainstream financial system. There's a straightforward concept which is being worked on, which would be a de minimis account that anybody could store a certain amount of value in that would be in the mainstream banking system, would be available to everybody in the world. But you're going to have to agree with one thing. You're going to have to agree that you're not going to do the kind of AML, KYC work on that account. So what number you pick, $300, $500, that anybody can have and have that much money around, effectively cash in your pocket, now it's digital. But it's going to take that decision. Now you'd say, well, that's an easy decision, let's just make it. Well, how many 100 whatever countries have to make the decision? And all the other subparts within them have to make the decision. And that's the issue about the regulatory scheme is it's not that it exists or doesn't exist in innovation, is that it is absolutely atomized, it's absolutely scattered, whenever you get the things that you're trying to take to broad scale. So simple ideas, a de minimis account that people can use to exchange value that can be very cheap and very inexpensive and done it, become caught in the question of, anti-money laundering, Smurf money laundering, all the stuff that then leads people to regulate it. And so it's not technology, it's not even a concept, it's just that we have to agree that we're going to let something go on. And that's the balance we need to get on a worldwide basis, I think. And that's just one example, and you can do many more.
Ajay?
I think that the regulatory environment around innovation is both a hurdle and a benefit, in the sense that in a number of countries overseas, if you can get the government and the opinion leaders and the regulators to see the value of what you're proposing, back to the idea of what are you really solving for, they will tend to align behind you when they finally feel comfortable with the idea. And once you do that, then you get scale behind you. I'll give you a tangible example. We made a commitment as a company about 3-4 years ago that by the year 2020, we would, through our banking partners and digital partners and phone mobile network partners, we would reach 500 million people who were previously denied access to financial services products in a tangible way. We would reach them by 2020. We have now reached 260 million. We're well on our way to the 500. We'll get past the 500 million. And the ways we've got there, to give you an example of a country like Egypt. In Egypt, 54 million adults, 14 million have a bank account, 40 million didn't. But everybody had a phone. Not necessarily a smartphone, but a phone. So we went to the government, showed them a simple digital wallet that you could put on a non-smartphone as well, got them to agree that every inward remittance will flow through that, got all the banks to align with that, got the mobile network operators to agree, connected that to a virtual card number for the internet, to a bill payment service that we invested in to enable utility and phone bills to be paid without going to stand in a queue, and gave them another card that's connected to the balance on the phone to enable acquiring of product and service in a shop. In 2 years, Egypt will go from 14 million people banked to 54 million banked. We couldn't have done that without the regulators being with us. But we had to get them to get there with us. So I think it kind of works both ways.
But it's stickier when you're trying to add underbanked people who might be in China or Iran, for instance.
Yes. And that's the challenge you've got with countries that either don't follow the same rules of the game. And so there is a whole issue of the balkanization of regulation around the world. And somebody mentioned earlier today about the balkanization in the case of data. I think it was Jeff who talked about it. But I talked about the same topic yesterday as well. I believe that the scale advantage that global companies have, American companies in particular, is actually a danger if we allow ourselves to be balkanized by rules, regulations around data, cybersecurity, and access, and KYC, and AML, and all those things in multiple countries. And I think that actually a number of companies in the data and information services world in the US are actually facing that challenge as we speak.
Brian, we've heard about the pilot that Bank of America and Microsoft are doing with blockchain and the merits of blockchain as a way to settle cross-border payments. But it's great to talk about all of these innovative technologies and what might come down the line in the future. But what happens to legacy products? What happens to plastic? What happens to brick and mortar 5-10 years down the road?
The transformation continues to take place. So in mid-1990s, when online banking came up, I'm sure a lot of the CEOs had people come in and say, this is the end of branches. And guess what? 20 years, we still have a lot of branches, less than we had then. So you're basically going to follow the customer. But there's going to be, all this change has this very important group to us, customers, whose behavior will change at the pace it's going to change. And so whether we're an Apple Pay, Google Pay, Samsung Pay, Android, all of them, we are in all of them. It's still a very, very small percentage of the amount of money that our customers move on a given day, but growing. And it'll take years for customers to get used to that. And that's got to be better usage, better availability at the merchant, better, easy to use. But it will never replace in any decade we'll see. So the question for our industry is we have to maintain all those things. So we have the branches, we have the phone systems, we have the ATM systems, we have mobile wallets, we have cash we move around in all different ways, we have checks, we have and all the different things, and that's going to be here. So I don't think in 5 years you'll see anything but a higher percentage of change. And then the question is what unleashes the real change? And so on the deposits to checks at ATMs, after 25 years, we were running about 20-25% at the branch. Person going to branch, they could have gone to the teller, they could have gone to the ATM, about 25%. When we put the scanner in that put the image, so the people on the other side of it said, hey, these idiots aren't losing my check, we went to 50% in 5 years. With mobile, we're at 19% this quarter, starting in 2012. So you will be able to move that thing, but even after 4 years of mobile, we're still only at 19%. So you still got 80% to do, and still about 30% still go through the teller when a customer doesn't even have to go to the bank or the ATM, could just take a picture of it. It just takes a long time to change human behavior. So we'll have to maintain all these systems and maintain them well. And the art for us as providers will be integrating all this wonderful technology, partnering with people outside, but figuring out the balance of how you move, how you nudge the customer forward, but you keep right with them, and how you don't push them past the point of their comfort, or otherwise it'll start to revert back and create real problems.
Ajay, the death of plastic might have been greatly exaggerated, but there are some countries where they have leapfrogged it entirely. India, for instance, and many countries in Africa. How do you develop for those type of societies?
Well, I think India actually is, I'm not sure what India is leapfrogging right now, because they've just managed to get themselves into a peculiar situation where, while the idea of getting out of solving for cash being used is a great idea, they're going through a terrific issue with the transition that they're working their way through. I don't think they'll get out of plastic. I actually believe, a bit like Brian, plastic is around, but a lot of other forms of payment will also proliferate. And there's nothing wrong with that. My view of all these legacy products and legacy technologies is, I'm not a card company. I'm a technology company that enables connections to be made between endpoints. And so I'm not fussed about the form factor. I'm fussed about playing a role in a safe, secure way and in a convenient way to enable that money to move from one endpoint to the other. The moment you take that view, then my legacy technology is that ability. It's not the form factor. It's not one endpoint. It's the ability to play that role, which means I have to keep reinventing my own technology, invest in things that make some of the things I had obsolete, add new things. It's just the nature of what our business is. And I embrace it because I believe that if you embrace this, you'll stay one step ahead and you'll keep doing well. That's just the way it is.
But will accounts be 16 digits? Will they be identified by QR codes? I mean,
doesn't bother me. We're using QR codes right now.
At some point, they'll have to have more than 16 digits if we actually get to
Correct.
a billion plus
He's
people.
correct.
So.
We're launching QR code for acceptance in India, actually in collaboration with Visa and a couple of other companies on the ground. We are doing QR codes in Africa. We're doing things with non-16 digits in India. There's 12 digits attached to the UID number. We're doing a whole range of things. It doesn't bother me. What does bother me is I want to be the player who enables the connection between the two endpoints to be done safely, securely, and seamlessly. That's my real technology and my real asset.
Earlier in this conversation, you were both talking about investing in innovation within the company and then getting out of the way, allowing people underneath you to find a problem to solve and let them on their own figure that out. But how do you decide what you'll put capital behind? Because Ajay, you were saying yesterday that money is finite, and this was a conversation about cybersecurity particularly, but it is finite, and you have to decide how to allocate it, and I'm wondering how you do that.
It's more of an art form than a science. I think anyone who tells you that we've got it all figured out about how to allocate projects, money, that's probably not correct. You try and make logical discussions happen about the likelihood of success of certain things that are more developed. You put more money behind them to take them forward. You try and kill others. It's really hard. Our budgeting process is one of the most painful periods in the course of a year that you go through because almost every project that comes up to you is attractive in some form or the other. But you do have to make your decisions. One thing I've learned over the years, budgets are not something you should run a company by because budgets are made in July, August, finished in October, November. By January, the environment has changed. And so I try not to hold myself only to the budget. I hold myself to the competitive environment and the opportunity I see in the market and try and run the company for that and try and work my way backward into the budget rather than use the budget as the limiting factor of where our company is going. And it's hard, it's very easy to say what I just said, but when the quarterly pressure comes on a publicly held company, what I just said becomes pretty difficult to live up to. But we're trying, and we're doing reasonably well through most of the years on managing forward rather than backward from a budget.
Brian, how do you think about the budget in terms of innovation, but also in terms of people? Because you've been in a restructuring mode for several years and trying to shift away from legacy businesses and toward the future. How do you identify where you need new people and where you need new talent?
Well, we basically try to run a multi-year process. And again, the environment will change during that time frame, but you're sort of recasting that every quarter for 12 quarters forward to kind of keep a track. And you have to, in my mind, you have to keep stretching your horizon, or else a lot of this transition you'll never be able to find. In other words, if you say, back when years ago when I played a more direct role in some of this decision making, we used to have the adage you had to pay back in a year, or you had to do this. The problem with the kinds of changes we're making, they're sustained 3 and 5 year investments against something that will come true. And thinking that through is a different life cycle. One of the things I have the luxury of is it's illegal for us to do any acquisition, so I can get rid of the thought that anybody's going to get our way out of it by acquiring something. And so we can be more organic oriented. But it's multi-year looks, it's constantly revisiting the prioritization. Let the team work, the ins and outs of each project. But I think the best piece of advice I give is really starting to lengthen your horizon on your investment strategy so that you make sure that you can match that with the real customer change or the product change, or else you never commit yourself to do the longer term things. That being said, you got to drive the current efficiency too, as Ajay said.
We've covered capital, we've covered people, we've covered the global economy, and a whole lot more. But before we close out, Ajay, I'll give you the final word as the outgoing chair for the the year that you spent in this role at the Financial Services Roundtable, the conversations that have taken place, and what you hope it accomplishes next year.
Oh, you mean I should give my task list to Brian? I get it. I'm just dying to do that.
Publicly, so people can hold him accountable, yes.
It's still got a lot on it, I found it. It was supposed to be short.
Yeah, thank you. Yeah, okay. So I'd say the first thing is I would tell you that working with Tim and Eric and the gang is a pleasure for anybody who's had the opportunity to be the chair of this Financial Services Roundtable. Tim makes it very easy for the chair to do what we need to do because he does a lot of the heavy lifting with his team. And in fact, the reason you've had such a successful day and a half is, I would say, a large part due to him and his team. And you shouldn't be thanking us, we should be thanking him. That's the first part. The second part is, I believe, what we did with this FinTech Ideas Festival. And I was talking to Bill and to Richard Davis a little while ago. My belief is that we should be doing this at a frequency that I may not have thought about before we actually have been through this day and a half. And one of the things I'm going to ask Tim to work on with Brian, if I had a chance to do this, would be, let's think about doing this similar time next year. Don't leave it longer than that. There's enough value to be gained by this interaction. And I think that's a task that Tim's going to have to see how he deals with Brian. And I think the third part is, which is really important to the industry, we have been through a cycle of relatively difficult regulatory environment. In some ways, well-deserved, and in some ways, I feel we shouldn't lose sight of the wood for the trees. This industry serves, the banking industry and the financial services industry is the engine oil of a car. And if you squeeze the engine oil to the point where you don't sort of keep it fresh and lively, you will create difficulty for the automobile. And our economy needs the financial services industry to be revitalized, constantly pumping ideas and innovation into the system. And I think we have an opportunity to engage in a constructive way on how to reduce some of the barriers to that for this industry.
So I've got to cure the common cold, is what you're saying.
Yes. You got to work all that out.
Okay.
No pressure. My thanks to both of these esteemed gentlemen for a riveting conversation. Thank you.
Thank you. Thank you.